Well done. So when we caught up, there's Barry newly excited because you're always a guy who looks into the future and says, there's something going on here and I want to be involved, right? You were super early to Bitcoin. You were super early to a lot of the companies in the space. You were super early to other cryptocurrencies. Seeing something early tends to be what you manage to do. And AI comes along and suddenly it grabs your focus thinking, okay, where is the nexus between this and blockchain technology? And it's now kind of become your true focus right now. So talk me through this and your realization of, okay, there's another big opportunity lining up and you want to be involved.
Hey guys, welcome to Everyday Finance. In their conversation, Barry Silbert and Raoul Pal discuss the transformative potential of a future driven by cryptocurrencies. They highlight the growing momentum of Bitcoin, the groundbreaking advances in decentralized finance, DeFi, and the rapidly evolving role that blockchain is beginning to play in global finance. In addition to highlighting the fact that the adoption of cryptocurrencies is not merely a trend, but rather a significant structural shift that has the potential to reshape financial systems all over the world, they investigate innovative investment strategies and disruptive possibilities. Despite the fact that they acknowledge the risks associated with rapid change, their conversation indicates that a new wave of wealth creation and financial democratization is on the horizon. In the meantime, a more comprehensive market update reveals that the Bank for International Settlements, BIS, has issued a warning that the rapidly growing adoption of cryptocurrency and decentralized finance could potentially destabilize traditional financial structures and exacerbate inequality. In order to emphasize the significant role that stablecoins play in the process of financial transfers during times of stress, the BIS has called for more stringent reserve and redemption rules, particularly for stablecoins. Now here is latest update.
It reminds me so much of a couple of instances in financial markets in the past. It's like the Bear Stearns moment followed by the Lehman moment. It's like you could deal with the Bear Stearns moment, but the time got to the Lehman moment, all trust had disappeared in everything and everybody.
Yeah,
and it was
and I had lived through those, and I thought, we were like we saw what was happening in the market in the end of 21. I mean, we were not deploying money. I was like, all right, we've got our war chest, like we're ready for whatever comes, but we could have never seen. We didn't see the Three Arrows thing coming. We didn't really have a whole lot of visibility into Genesis activities, but we didn't see that coming. And certainly the FTX thing, I mean, very few people had any clue that was going to happen.
And the other one it reminded me of, as I've mentioned this many times in the past, is 3 Arrows reminded me so much of long-term capital. When I was a salesman at Goldman, they were everybody's largest customer and nobody realized it. Of every desk, the equity derivative desk, the fixed income desk, the swaps desk, everybody. And then I mean, don't forget the Fed had to cut rates and essentially bail out all the prime brokers in exactly the same way, but there was nobody to bail out Genesis except your own balance sheet.
Yes.
And then you get the second hit from the whole thing.
Yes. So we're happy that chapter is behind us.
Yeah. What was it
normalizing?
Like? What was it like to go through it? Because it's fucking terrifying and it's horrible and it must have been really tough.
It was tough in a number of ways. One, that everything in crypto and social media is amplified, good and bad and lies. And I had never experienced a situation where there was such a willingness, and it wasn't just directed at us, but there was such a willingness.
I know, I'm like
for people to make up things and for people to believe it and amplify it. And so that was really surprising, especially given all that we have done for the space. I was surprised that there was such kind of vitriol, kind of pointed in mine in our direction.
Well done. So when we caught up, there's Barry newly excited because you're always a guy who looks into the future and says, there's something going on here and I want to be involved, right? You were super early to Bitcoin. You were super early to a lot of the companies in the space. You were super early to other cryptocurrencies. seeing something early tends to be what you manage to do. And AI comes along and suddenly it grabs your focus thinking, okay, where is the nexus between this and blockchain technology? And it's now kind of become your true focus right now. So talk me through this and your realization of, okay, there's another big opportunity lining up and you want to be involved.
It's an evolution in that over the past, I mean, look, over the past, 12 years, 13 years since I first bought Bitcoin, I've always been intellectually curious about everything else that's coming out of our space. And, I think for the most part, 99.9% of crypto tokens that are out there have no reason to exist and are worthless. And so my bar for getting excited about something is really, really high. And so over 10, 12 years, so look, certain things have gotten me excited and we put some money to work, and, some have, many have worked out, some haven't. But over the past couple of years, as AI has become a theme, and as I have come to appreciate the power of AI, I mean, I'm a markets guy, a finance guy. I'm impressed with your ability to kind of be, kind of an AI pioneer, as well as being a markets and finance guy. For me, I had a bit of an epiphany as to, well, I caught up with the rest of the world as to, okay, AI is going to be a big thing. And it just so happened that folks on my team were introduced to a couple individuals who had written a white paper about something called Bittensor in 2021 that they got excited about. And I started looking at the intersection of crypto and AI. And I think a lot of the early applications were kind of using crypto as like a payment kind of solution for AI, less so kind of building, infrastructure to build AI on top of. So I started, I started looking across the whole decentralized AI space. I started digging in on Bittensor, and I very quickly came to the conclusion that from a theme or era perspective, this was the next big era for crypto. You had the Bitcoin and Ethereum, and you had NFTs, and you had like layer twos and DeFi. I think this is the next big investment theme for crypto. And there's a number of projects that have launched. We've backed a number of them, but the one that over the past year and a half that it's reached escape velocity is Bittensor. And so I decided last year, we're going to do with Bittensor, try to do with Bittensor what we did with Bitcoin. We are going to invest in it. We're going to build on it. We're going to help educate, create awareness, create access. And we launched a new business in the fall last year called Yuma, that I'm putting my jersey back on, and I'm the CEO of Yuma. I'm still running DCG, but I'm back in the game, and I'm now building this business Yuma that's focusing exclusively on this thing, Bittensor.
Despite recent muted gains brought on by tariff shocks, macroeconomist Lynn Alden continues to be bullish on Bitcoin. He confidently predicts that Bitcoin could reach above $85,000 by the end of the year. According to her, a significant liquidity event, such as aggressive monetary easing by the Federal Reserve of the United States, has the potential to spark a robust rally in the price of Bitcoin. While this is going on, tensions regarding regulation are rising. Prosecutors in the Eastern District of New York have moved forward with charges against former SafeMoon CEO Braden John Caroni for securities fraud, wire fraud, and money laundering. These charges reflect a growing trend of enforcement in the cryptocurrency space, despite the fact that the Department of Justice has advised against regulation by prosecution. The case of Caroni is being closely monitored because it is a test of the equilibrium that exists in the world of digital assets between encouraging innovation and demanding accountability. It is also establishing important precedents for the way in which the industry itself develops. Watch more clips.
No, it's closer to NFTs, which are priced in ETH.
Right.
Let's say
that would be the closest analog. Exactly.
And it's early stage. What kind of people are in the ecosystem? Is it all kind of wide-eyed super smart crazies where things normally start with. These people are like, oh wow, I've discovered this new. Who's in it, and what are they? I know it's relatively broad and deep, but give me an idea of how big this ecosystem is, and what kind of people are involved.
For Bitcoin OGs, we are circa 2012, 2013 right now.
Yeah.
And look, if the price is any indication of kind of where it is, the price of Tau, it's like $200 right now.
Yeah.
So if you kind of look at like in the history of Bitcoin,
what's the market cap?
It's 1.5 billion or so.
Right. Okay. Yeah.
And so you have, in the same way that the early pioneers in Bitcoin were more kind of libertarian leaning, which some people would call me and them crazy, but that was a philosophy. In Bittensor, it's really more AI crazies.
Yeah.
And
as I met, and they're very technical people, and they're all different backgrounds,
but legitimate backgrounds, like legit. And so that's inspiring. So you spend time with individuals that are building the subnets, and then what's happened really over the past couple of months is there's a real explosion of the infrastructure that's being built to make either the intelligence that's getting spit out of these subnets accessible or monetizable. There's an explosion in the applications that are being built for people to discover subnets and to invest in subnets, to track subnets. And it's as we're kind of going through this market correction right now, there's this small community of people. We're all just kind of heads down doing our thing at Bittensor, and things are growing really fast, and people are, generally speaking, not being distracted by what's happening with crypto and the macro stuff.
Because it's almost too early to matter right now. First, you got to build shit.
We all want to move faster. We want to do more. We want to, before the world discovers this, we're all trying to properly position the businesses that we're building, the investing that we're doing, before the world wakes up to this amazing thing that's being built.
So how I guess you're thinking about it right now is like early stage build of EVM, where it's all developers, it's the building out of use cases, what's happening, as opposed to token activity, retail investment, total value transacted. It's too early for that, right?
It's too early, and the infrastructure isn't even there yet. Like right now, if you want to buy subnet tokens, you need to own Tau, and there's half a dozen sites you can go to where it's not quite as bad as Mt. Gox, but it's kind of like that early clunky.
Yeah.
I want to express my view. So Grayscale launched a product for it. So there's the Grayscale Bittensor Trust. So again, just the playbook. So just like what we did with Bitcoin in 2013, we're doing the same thing with Bittensor. And Yuma, that would build it, the business that we're building, one of the areas we're really focusing on is how do we make subnet investing more accessible to a larger group of investors who don't necessarily want to, stake or swap, or who don't care what a Uniswap pool is, and will never care what it is. But they just want to make a bet on what they think is going to be the next Amazon of the World Wide Web of intelligence.
So when you're looking at doing layering investments on top, using the playbook, is it the equity side or the token side, or both, that you're looking at? And what kind of opportunities are you focused on at this stage? Is it infrastructure, and how are you thinking about this?
So I generally hate any projects that are trying to create enterprise value or value for both equity holders and token holders.
Yeah, it's weird.
And so we really do try to be focused and disciplined on, we're either investing in the subnet tokens, or we're investing in Tau, which again is subnet is kind of indirect way to play Tau.
Yeah.
Or we're investing in businesses that are building. I'm looking for the Coinbase of Bittensor. That's what I'm looking for now. I'm looking for the BitGo of Bittensor. I'm looking for the Chainalysis of Bittensor. And so our investing is infrastructure, it's subnet tokens, it's Tau itself. And then with the business with Yuma that we're building, we just want to be an easy way for people who want to access Bittensor, if they want to build a subnet. We've launched an accelerator. So if you have an idea for a competition that you want to run, where you want to incent the big brains of the world to compete, we will help you get that off the ground. If you own Tau and you want to stake it, you can stake it with Yuma. We're wearing a lot of different hats, and at the end of the day, it's all to advance the vision and the mission of Bittensor that the founders have created.
It also has a feel of Bitcoin mining about it, where you're bringing your hardware and your compute to secure the ledger, and which you get rewarded for it. Here we're going to be different people bringing different aspects to it, whether it's data, whether it's compute, whether it's inference, all of these things, right?
Well, I'm so happy that you brought up that example, because take a step back. Today, there's annually there's about $12 billion of Bitcoin that gets emitted annually to the miners, and that $12 billion is being spent to secure the Bitcoin network, which is great, super important. Does it need to be $12 billion? Probably not, but it is. Bittensor is instead taking those economics and using it as an incentive to pay the providers of the compute, the owners of the models, the owners of the data,
to network infrastructure, as it were.
Exactly. And today,
decentralized.
However, technical indicators are now warning of an impending reversal, despite the fact that XRP experienced a sharp rally, climbing almost 30% from recent lows. An inverse cup and handle pattern has formed, which indicates that a breakdown below the $2 neckline could result in a dramatic 40% drop, which could potentially drive the price of XRP down towards $1.24. Peter Brandt, a seasoned trader, has issued a warning that the market capitalization of XRP could decrease by as much as 50%, which reinforces the bearish case. The realized price of XRP, which is the average purchase price of coins that are currently in circulation, is currently hovering around $1, which is a level that has historically been associated with significant price declines. Given that more than 80% of XRP holders are currently making a profit, the possibility of widespread profit-taking could hasten the decline. In addition, sentiment has cooled across the entire cryptocurrency market, and there is only a 35% chance that XRP will reach record highs of more than $355 by the year 2026. The combination of technical weakness, waning bullish momentum, and broader macroeconomic uncertainties, particularly the worsening of global trade tensions, suggests that XRP, along with a significant portion of the cryptocurrency market, may be subject to continued downward pressure in the near future. Thanks for watching.